The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to review the 3-day setup model. We had some excellent opportunities. It's a non-farm payrolls Friday tomorrow. And Thursday is the third day when we count back Thursday, Wednesday, Tuesday, and we can hunt for best trade candidates. Now, you've heard me use the expression repeatedly, what setup have you mastered? We'll go back and cover a couple of very basic concepts, understanding pump and dump and pump. When I'm hunting a best trade candidate, I'm looking for opportunities where an instrument is going to go parabolic and not come back in that session and potentially in that day, depending on where we're at in the Monday to Friday template. The whole point, as I emphasize repeatedly, is I'm hunting the same setups over and over again. Dump and pump and dump, whether it's a 3-session setup or a 3-day setup. Now, of course, there are other types of proprietary trade setups, but the main thrust of all of these is 3-day setups and 3-session setups from the playbook, repeatedly going over those. Today we're going to go over Monday's opening range and initial balance again, and on different instruments to demonstrate again that in a high percentage of weeks, one of these two extremes will tend to hold. By the time Tuesday has traded, we will have our high or low in place in most cases for the week. One of those extremes will tend to hold. Signal days and trigger days, day 3 longs, day 3 shorts, first red days, first green days. We had several first green day opportunities for traders today. Inside day is a signal day for either a false break, reversal, or a trend trade opportunity. The important part about inside days is understanding where they present in the template. Again, we had very textbook examples of these in the indexes this week and in gold. Often a 3-day setup can culminate in a parabolic 3-session setup, an opportunity that potentially will not come back, an ACB. It ain't coming back for the rest of that day. Reviewing my simple model. It's simple because I can reproduce it every single week, and the opportunities repeat every single week in a weekly template. The front side of the week is Monday, Tuesday, Wednesday. Why is it front side? Because we're closer to the front side of the week than we are to the back side of the week. And in the front side, often that will build the template for the back side of the week. And the exceptions to that, as I've spoke about, are when we're at a high of a month or a new month or a low of a month. When a new month begins, we can see peak formation reversals occur Friday, Monday, Tuesday in that area on the front side of the week. But we'll often still see backside reversal or continuation opportunities. So reviewing Monday's opening range. The opening range is what sets the initial high-low when the new week and a new timing cycle start. Tuesday is day 2 and typically will expand the range. We can see trend trades on day 2 or reversal trades at lows of weeks or high of weeks if that market breaks out of the opening range. Wednesday is day 3, and we can see again blowing off in the direction of a breakout on day 3 or a reversal opportunity if indeed that presents. That's the midpoint range of the week. It resets into the backside of the week. Day 1, day 2 is Thursday, and the same applies for a day 2. We can see a trend trade continuation on a Thursday. We can see reversal trades, high of week, low of week, reversals on Thursdays. And Friday, day 3, is the closing range of the week. Now, let me re-emphasize, I'm hunting for the best playbook setups on any instrument. I am not trying to curve fit this template onto every instrument. But if you are patient and sit on your hands, like Bill Lipschutz says, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. We'll take a look at the dump and pump model, as there were some great opportunities this week in this particular template. Now, often we can see on the front side of this breakout It may not be in your session, or it may not have been an opportunity that was tradable. It may have moved early. It may have moved in between sessions, whatever. And we can see day 2 consolidate and close as a first green day, and a day 3 session parabolic reversal opportunity. Let's take a look at one of those from this week. Monday's our opening range, and we break out of Friday's low of week level on silver. We're looking at a 30-minute chart, and that market closes back inside. So it closes within range. The market had already broken out on Friday from Thursday's low of day level. We're going to review the importance of understanding what happens when breakout traders are in the markets in a future video, but we're going to cover this in step-by-step method so people can understand. Each week has a template. There's been a lot of confusion, misinformation, facts misconstrued. But number one, when a market breaks out, we have a breakout on day 2, Tuesday, our initial balance. Remember, opening range and initial balance from the playbook. The market closes outside of the opening range. Tuesday. Now remember, I said that in a high percentage of situations, by the time Monday, Tuesday has printed, one of those extremes will tend to hold. There's Tuesday's high. It made a higher high. Higher high is the template for a dump and pump. A question I got today was on one of the indexes was it had a lower low. Unless a daily level is broken, let me repeat this. We're making lower lows here. So unless a daily high is broken, there is no higher highs until a high of day level is broken. So the high of day level has been broken on Tuesday. It closes in breakout. Closes in breakout on Tuesday, day 2. Wednesday closes as a first green day. First green day, page 64 in the playbook. Now, this is why it's important to understand hindsight. Hindsight pays. You can read the hard right edge all day long, but unless you have a trade set up for a 90-10 parabolic opportunity, then my question always is for myself is any trades taken, 50-50 trades, which are 50-50, I would rather wait and sit on my hands until I have a 90-10 parabolic opportunity that is going to explode and go vertical. We have a first green day heading into Thursday. So remember, we talked about 3-day setups. Well, people get really confused. It's really simple. Whatever day you're on, count back 3 days. Today's Thursday. That would mean I'm looking for a Tuesday, Wednesday, Thursday, either trend trade or reversal opportunity. Now we've broken out, we've consolidated. Now let's go back to our example template. Now remember, we talked about breakout, consolidation, first green day, and the pump day. 1, 2, and 3. So coming into Thursday, we may have an opportunity in any one of the 3 sessions. We had an opportunity in the Asian window, just this simple basic model for trade entry criteria on page 29 in the playbook. This is a scalable opportunity, and we're on the back side of the week. So traders need to understand that this setup has now built over 3 days. So when traders ask me, is a 5-minute trend line enough and all these things, you have to understand this is a setup that has been built over 3 days. It is being driven by other time frame traders. High of day, yesterday's high of day or high of week, yesterday's low of day or low of week, Friday's closing price. And each day when the market closes, we have a closing price for that day. And as Paul Tudor Jones says, always think of your entry point as last night's close. Now this market's broken out and gone higher, but we're on the inside of the high and the low of the week. And as I've mentioned repeatedly, when a market breaks out and we're heading into our new session, our third session, I trade the New York session, we redraw those levels. Now we have a new high and a new low of day level. The news calendar can affect these templates. We had major red news at 8:30 today, and the market broke higher above the lower low that was made heading into the U.S. window prior to our New York open. The market stayed on top of that level and coiled again back inside of our universal EMA. But if we go back to our 30-minute chart, just in a simple demonstration, we have a high close and we have a low close. Opening range, initial balance, Friday's closing prices where the auction process started from. The opening range put in a higher closing price before dumping down on day 2 and closing in breakout and putting a low closing price of the week in place. When we put our high-low indicator on there, we are above 50% of that range when we coil into our New York Open session. Traders have often heard me joke, if you can count to 3 and tell time, you can make a lot of money. First hour, second hour, and a third hour parabolic explosive continuation trade back through the high of the week. A reversal from the opening range breakout, the close in breakout, and a day 3 reversal, 3-day setup back through the high of the week. Now, understanding again, these parabolic setups are scalable in size. Now, let's go back to the playbook one more time. If you're confused, or if you're struggling, or if you are inconsistent, understand this is what I am hunting. I am looking for these setups. I am not trying to trade candle movement, highs and lows, catch a move, grab some pips. These are the specific setups that I'm hunting that will play out into a parabolic opportunity. Parabolic trade setups are scalable in size. They rinse and repeat. They show up frequently, and it doesn't matter what instrument I'm finding it on. It could be the Japanese yen one week. It could be the NASDAQ the next. We can find it on a Tuesday. We can find it on a Wednesday. We can find parabolic opportunities every single day if we want to cover a large enough basket and hunt out those setups. Another example, very similar, is West Texas Oil. Monday broke out of the low of week. If we just scroll back, we can see it broke through the low of week and closed in breakout. Tuesday, day 2, expanded the range and continued lower and also closed in breakout. Remember what I said earlier, by the time Monday, Tuesday has printed in a high percentage of weeks, one of those extremes will tend to hold. Now, as we head into our Wednesday, it closes as a first green day. We had inventories on Wednesday, and that closed in breakout above Tuesday's high of day. Now, this market closed as a first green day. We have now a Tuesday, Wednesday, Thursday potential 3-day setup heading into our 3-session opportunity to see if we have a parabolic opportunity when we get there. Timings, levels, behavior of price. First hour puts a high of day in place. Second hour puts a low of day, low of session in place. Takes out the current low of day. We've broken out. We redraw the levels. We have a new low of day level in a first green day template. We have breakout traders in the market long. The market makes higher highs. Heading into our third hour, we have our dump and pump template. Dump and pump template. Now, again, reinforcing, this is exactly what we are looking for. We're looking for the signal, the trigger day. How does price behave when we get to our timing window? This is a parabolic setup. We have our universal coil EMA. Several traders hit this trade today. We're looking at another currency, the Euro Australian dollar. We have our opening range on Monday that closed back inside of Friday's range. Opening range is expanded on Tuesday, day 2, and that market closes in breakout. Closes in breakout outside of the opening range. We have our low of week level in place. As we talked about again, opening range, initial balance. If you master understanding that and its importance, the templates can become much simpler to understand. We have a market in breakout. We have a first red day close on Wednesday. It has also expanded the range. Day 1 breakouts. Day 2 breakouts that have reversed and closed as a first red day. First red day is a potential trade setup opportunity if indeed it presents when we get to our session. Remember the 3 levels. When the week starts, it starts its auction process off from Friday's closing price. Monday made a lower close before auctioning higher and making a higher close. We have our high of week, low of week levels. We have a low close and a high close in place. If we put our basic model for trade entry criteria on this chart, our 30-minute chart, Other time frame traders may be potentially driving this move if indeed it sets up on our universal basic model for trade entry criteria. Now, this was an excellent opportunity in the Asian session for traders to, again, compound their account. This is a parabolic opportunity. So reinforcing hunting out setups that are 90-10, not trying to just catch the moves and sell highs and buy lows, which often doesn't have a good outcome over the longer term. Rinse and repeat setups, though, where you know you have a 90-10 edge, are the opportunity where you can scale in to these markets during your session when the opportunities present. Now, traders also had an opportunity, high of week 3 session parabolic reversal on our day 2. Day 2 on the backside. So remembering we have 2 types of opportunities we can be hunting out: reversal trades and trend trades. Now, we've had 3 breaks outside of the opening range: a closing breakout, a second push to the high that did not break out, a lower low on the inside, a daily low level has been broken, and they pumped it back up into the high of the week. First hour, we had a New York Open reversal opportunity at the high of the week in the US window. Day 3 longs or day 3 shorts in the market. Page 51 in the playbook. Now we have our 3 pushes into the high of the week, and we have our engulfment after major red news. Now I want to just demonstrate to traders how simple and repeatable the process can be. I talk about using a 1-bar stop. In this particular case, I would keep my stop probably just above the high of day level, because this is now set up to go parabolic. And once this breaks down, this should not come back. We have volume trapped up high. If traders wanted to keep it at the extreme, there's nothing wrong with that, but I often talk about having a 1-bar stop, because when they go parabolic, they should not come back. Now, this is one currency pair that gave 2 trades in the one day itself. First red day opportunity in the Asian session, a high of week reversal trade in the US window after major red news at the New York Open. Pump and dumps, dump and pumps. They're simple, they're reproducible, they're frequent and show up on any instrument. They're scalable in size, and they offer 90-10 parabolic setups. Not chasing movement, not chasing candles, not chasing gaps, sweeps, hunts. These are specific setups that rinse and repeat. There were several other opportunities this week. Now we're heading into non-farm payrolls, and I emphasize to traders to let the market digest the non-farm payrolls release, not getting in front of the news, focusing on mastering repeatable setups, not catching moves, not grabbing pips, not scalping in and out on little 30-second charts, because the reality of it is that they are not scalable. Scalability is trade setups that no matter how large your trading account grows, you can increase size on your 5-star opportunities and scale up on your 3-star opportunities according to the quality of the setup. Keep it simple. These markets show up with the same opportunities week in, week out. Behavior of the trader. Master your psychology. The psychology is be willing, as Bill Lipschutz says, to sit on your hands and wait. If you are chasing moves or getting stopped out or counter trending markets because they're up high or down low, you still have not mastered a setup. Master a setup. One good setup. And then rinse and repeat that until you master that, and then add in a couple of other opportunities that you can master and rinse and repeat and scale them up in size. Keep it simple, traders. This is a winnable game. Have a great day, and may the markets go with you.